Hello, everyone, and welcome to today's panel discussion on tailoring crypto tax to India's needs. Thank you to all our attendees for taking out the time today to join us, where our esteemed panelists shall share their wisdom and brainstorm on the idea of a virtual digital assets tax regime to suit the needs of India from an investment perspective. To make sure that we're helping you as best as we can on the topic, we have a question and answer chat box to source your questions. Please feel free to drop in your questions on the topic or share your feedback with us via chat box. Also, for the benefit of all our attendees, a recorded version of this webinar shall be made available 24 hours post the session on taxsutrareservoir.com, which is Taxsutra's dedicated ebooks and e-learning website. Without further ado, I would now like to hand it over to Taxsutra's Group Editor Arun Giri, who shall set the context for today. Thank you.
Thanks so much, Tanaya, and welcome all our readers, patrons, subscribers to this panel discussion, what promises to be an engrossing panel discussion on tailoring, India's crypto tax policy to India's needs. And before I hand it over to Govind for the panel, I'd quickly like to set the stage or set the context with this report, which has been published by Asia Center, a non-profit, and it's a report that Taxsutra has partnered. Very happy to partner with this report on virtual digital asset tax architecture in India, a critical examination. I would urge everyone to go through this report. It's there on taxsutra.com as well. Some key highlights of this report. And when before that, Govind, I hope you remember the legendary television journalist Tim Russert of NBC, who used to host Meet the Press when the Bush-Gore 2000 election happened, and everything boiled down to those 500 votes in Florida. Tim Russert, uttered those iconic words. It's Florida, Florida, Florida. And if you look at India and whatever has happened in the economic domain, 2022, we could say was in many ways crypto, and crypto. Which is why we said we'll partner with Asia Center on this report, and a couple of highlights, which I think will set the stage for this panel discussion. Is thanks to the virtual digital asset tax, the VDA tax, as it is popularly called, which was introduced in last year's budget 2022. This report says there's been a shift of cumulative trade volume of around 3.32,000 crores. That is almost $3.8 billion from domestic centralized VDA exchanges to foreign ones. In fact, this has also been reported by one of the leading pink papers today morning, not a coincidence. And the second point, the VDA tax architecture itself. The report is not critical, but it does detail out what other countries are doing on taxation of cryptos and crypto exchanges vis-a-vis India, and how India stands out in terms of taxing crypto, be it not allowing carry forward of losses, be it the 1% TDS, or even the capital gains tax aspect. The comparative chart in this report is something worth going into. A wonderful report brought out by Asia Center. And when it comes to tax policy, and we have one of the renowned tax policy experts, Mr. Ranjan here, many a times the complaint here in India is there is not enough research when it comes to enacting tax policies. With something like crypto, new age term, something that we were not familiar with 5 to 7 years back. A report of this sort does somewhere lead to a healthy tax policy debate on something on a concept which has huge regulatory as well as revenue implications. On that note, I'm going to hand it over to the panel. Before that, a brief introduction of Govind. Govind, my former boss and mentor in journalism. Very happy that Govind is moderating this panel. Govind is a television and print journalist who's reported and written on Indian business for over 25 years. He was formerly the founder, editor-in-chief of Bloomberg TV India, a 24-hour business news channel launched out of Mumbai in 2008. Prior to setting up Bloomberg TV, he worked with Business Standard newspaper as editor New Media. And before that, Govind spent 5 years with CNBC TV18, where he actively drove most of the channel's programming, growth and expansion. Prior to TV, he worked in print in the Economic Times and leading business magazine. He is currently a media executive and entrepreneur whose public interest journalism ventures use data stories in areas like health, education, and climate, as well as safeguard the transparency, accuracy, and integrity of news. Most recently, founded Boom, an independent journalism initiative that fights misinformation and explains issues with the larger objective of making the internet safer. He's also founded the award-winning India Spent, a public interest journalism outfit which uses data to write and syndicate stories in areas like health, education, environment, and fact checker, which monitors media, politicians, and other figures for accuracy. Govind, of course, when it comes to Govind, 45 minutes fly in no time. It's a pleasure to be welcoming the other panelists, Mr. Akhilesh Ranjan, Mr. Ramesh Bafna, and Mr. Raghavan Ramabadran. Govind, I'm as eagerly looking forward to this panel as the readers. Over to you.
Thank you. Thank you so much, Arun, for that very kind and lengthy introduction and time. Anyway, I'm happy to be here. So let me introduce our panelists and then lay out the ground rules, so to speak. We're firstly joined by Mr. Akhilesh Ranjan, a tax policy specialist, earlier member of the Central Board of Direct Taxes in charge of tax policy, legislation, and international tax. He was also earlier convener of the Direct Tax Task Force for rewriting tax law, and also a consultant to the OECD and OECD Center for Tax Policy. Ramesh Bafna is a chartered accountant and CFO of CoinSwitch Kuber. He earlier worked with Myntra and Flipkart, and before that in Wipro in functions such as internal audit to controllership to treasury. And we're also joined by Raghavan Ramabadran, executive partner at Lakshmikumaran Sridharan. He is a corporate litigation lawyer who practices before high courts and also advises on GST preparedness and works with a wide variety of industries, including digital. So this is our panel. So obviously, Bitcoin and understanding taxation of virtual digital assets needs to be conceptually sorted out for all our collective understanding first, before we get to what are the tax issues or the regulatory issues, as Arun also pointed out. And tax and regulation are looking at the kind of moves we've seen, which are quite different from other financial instruments or assets, are clearly interlinked in this case, at least in India and potentially in other countries as well. So on that note, I'm going to ask Ramesh a couple of quick, sort of almost quick fire questions to start off, and ask him to first lay out for us, what does Bitcoin mean in the Indian context, or virtual digital assets mean in the Indian context? What is also the distinction between a cryptocurrency and an exchange? To what extent can we draw parallels with the worlds we know, which is, let's say, secondary market trading in stock exchanges, where we can see, let's say, we can see and visualize a stock of Reliance Industries or Adani Cement and say, okay, here is what I'm buying. Here is what lies behind that. Here are the annual results that I can look at. So those are stocks. So what are the correlations that we can use perhaps to understand this world of Bitcoin trading or VDA trading better? And then we can come to the tax part of it. So Ramesh, it's over to you for about 4 or 5 minutes. And I'm going to give similar slots to the other two speakers as well.
Thanks, Govind, and thanks for inviting me for this panel. It's my privilege. From a crypto perspective, what I will try to do is not use any technical language, try to bring it in as simple terms and layman terms. Essentially, it is a distributed ledger, right, where the distribution is across the world, and it is decentralized completely. So the term says distributed, decentralized ledger using blockchain technology. Why this technology is important is that you need to have more than 51% access across the world of all the computers to hack the technology. Hence, the security of this technology is proven. It is very, very highly secure. And hence, blockchain being the underlying part of it. And it uses distribution across millions and millions of people across the world. Right? So that is the technology behind which crypto is the outcome of the entire technology. Right? You can have centralized and decentralized. Those are the choices. Centralized, we have taken an example of CBDC versus decentralized. the most popular coin is Bitcoin, right? So Bitcoin is also limited, and the crypto can be deflationary and inflationary. For example, Bitcoin is deflationary; it is limited in number. You can only mint 21 million Bitcoins and not beyond, right? So the characteristics are different, and there are similarly like Ethereum is another popular VDA, right? The way to look at Ethereum will be, let's say you're buying a stock of Google, right? Google is a company, the results are there. But if you were to buy a stock of Android is the technology which Google uses and many other companies can also use, right? However, it is led by Google. So if you were to visualize Ethereum more like an Android than that of a Google, right? So that's the visualization part of it. The way every crypto has their nuances. Some have aesthetic values like Shiv and Dogecoins. It's very discussed about, and there are real world examples around Ripple currency, which uses in terms of transfer of currency from. It's like Swift equivalent, right? So there are more than 4,000 cryptocurrencies. However, if you look at the top 100, it is where the majority of the transactions happen. Crypto is one part where you can mine the crypto, or it can be through a validation node if it is working on proof of stake method, right? Where does crypto and exchange, right? So if you were to convert your crypto into fiat currency, or fiat currency if you want to invest, right? Or you want to have a exposure to a VDA, you come to a centralized exchange, bring your INR and convert that into VDA and hold it, right? And just like similar other asset class, it can be one more asset class where you hold and look at that value over a long period of time. And when, for example, in CoinSwitch, you can bring your INR, you can buy and sell, and only take INR out of the exchange, right? So it's a closed ecosystem from that perspective, and you can have an exposure to those asset classes. For the new age generation, there is a lot more pull into looking at this asset class as well. Yeah, that's from my side.
Right. So, okay. So a couple of quick questions before I come to Mr. Ranjan. So what is the pool that you have? Like, for example, again, you use the example of Google. So Google, I know this is the share capital of Google. This is the absolute number of stock available anywhere. Whichever exchange I buy through, it cannot exceed that. So how does that work in this case?
Yeah, it's a good question. In case of its cryptos are by definition global, right? In terms of its world over. And if you look at CoinSwitch is we have liquidity in terms of people can come buy and sell, and we take those requirements from the customers and source the cryptos on a real-time basis and give those assured quantity back to the consumers, right? In terms of the point on audit reports or Reliance, you can look at stocks. What is the crypto by very nature are fully transparent. There are chainanalysis.com, there are CoinGecko, there are multiple areas where you can go and look at the situation of crypto on a real-time basis in terms of what are the activities. The top activities, like let's say big shares which are getting transferred, is called whale alerts, whale activities, right? So any big transfer of crypto from one to other, they're instantly available on a real-time basis, which is very different than waiting for a quarter end and then issuing the results of the company. So yeah.
Right. And before I come to Mr. Ranjan, so, in the case of a stock, again, let's go back to Google. There is a company and the company is performing a certain activity. What does Bitcoin or Ethereum for that matter do?
For example, in every crypto, there's a white paper. The first thing anybody has to look at is the white paper of that particular currency, and they list down what is that they envisage to use the technology for, what is the kind of use cases they are going to solve for. These white papers are available freely. You can go to whitepaper.com and then get the download. And the proof of pudding is the use cases. Most of the crypto logics are in GitHub. What the technology community does is go to GitHub, use those codes, and develop use cases on top of it, right? The more the engineering folks working on it, the more use cases which come over it, right? There is a lot more demand in terms, because now more use cases are coming, and the exchange in terms of for the contribution what you do, you get for validation, you get validation fees. Those because it's global in nature, it happens to a singular token, which is called crypto, right? So in terms of use cases, every VDA, every currency has different use cases. It's important for everybody.
Right.
Investing should look into the white paper to understand. For example, Reliance is in a particular segment, right? Versus Google will be in IT and technology, and Wipro will be in a very different space. Likewise, similarly, every VDA will have a white paper. If it does not have a white paper, please don't invest. That's simple.
Okay. And last question, and for this round, so in the case of, Google, let's say, I may be buying shares of Google and using cash for that. Cash. Essentially, I'm using cash. Similarly, let's say if I'm doing a forex transaction, then I'm using INR, trading it off against, let's say, US dollar or euro and so on, or pound sterling. How does Bitcoin work? I mean, so Bitcoin in itself is the currency, and yet people are buying and selling the currency. So is it closer to a forex in that sense?
See, every crypto has a different nuance, right? And what is enabled and what is not enabled. Technically, people can exchange crypto to crypto, right? But what is the role of exchange? If I look at as individual, as a general knowledge, I can, you as Govindraj, you can have a crypto, you have your own wallets, right? So this comes to a concept of wallets. You can have self-custody wallets, or you can have central exchange storing your wallets, right? If you are self-custody, then you can do peer-to-peer transaction. You can transfer crypto to anybody, right? And since by nature it is, you don't know who the other party is, it's completely anonymous, but that's the nature. But when it comes to centralized exchanges like CoinSwitch Kuber, right? There you don't. It's a there's no self-custody. The custody is with CoinSwitch. What happens is the consumer or the user will come to CoinSwitch with INR and deposit or put it in their holdings and buy a crypto. They can hold the crypto and they can sell the crypto. What they cannot do is take the crypto out. That is what we have not enabled. We have been extra conservative about it, right? In terms of not getting into FEMA or any other regulation issues, right? So being very conservative, given we want to be over the board and not get into complications, this is the first step till the regulation comes in. And we are pro-regulation. Right. We are looking for regulations to come in sooner than later, right? Until then, being conservative, bring in INR, have a asset class exposure, right? Understand more and more. We have introduced significant learning contents on our app, right? So if you want to understand Bitcoin, Ethereum, all the 100 currencies which we have significant amount of learning materials around it, videos around it, right? So it's more like an edtech, small edtech company.
Got it. Okay, got it. I don't know if edtech is the right word to use, but anyway, I'll take the learning part of it. Okay, Mr. Ranjan, let me come to you. Now, I think we have a fairly substantial base to now talk about taxation. So again, maybe if I may ask you, I mean, how does the taxman, first of all, look at something like this, which is conceptually new? Secondly, what is the correlative aspect here? I mean, again, what do you correlate it to? Because you always try and say, okay, can I relate it to the securities industry? Can I relate it to the real estate? Can I relate it to something else? And how, therefore, what is the thinking that is being used or the approach that is being used to then regulate? And then we can come to what specifically happened in last year's budget. And since now it's almost a year, what has that done or not done?
Yeah, thanks, Govind, and thanks, Ramesh, for that introduction. So when you devise a tax policy for any stream of income, it is first of all most important to understand what is that nature of that stream of income, which includes things like what is the nature of that good or service which is being transacted, how is it being transacted, who are those parties, can they be defined, can the medium be defined? These are things that must be known for a policymaker to apply the principles of tax policy out there. The problem with taxing virtual digital assets, that's the term in the law that is being used, VDA as we call it. The problem with taxing virtual assets is essentially that they are virtual. They seem to come out of nowhere. That's what the RBI says in India, that they have no underlying value. They can be created at will, it seems. They can be sold, exchanged, without anyone having any idea of how that value is derived at which it is transacted. I mean, that's the perception of I'm sure Ramesh will have many things to say on this. But but as far as policymakers go, I mean, they want something hard and concrete. What is it that is being transferred? What is it, and how do we value this which is being transferred? How do we make sure that this is the right value or a reasonable estimate of the value? And on all these respects, it's almost impossible to apply traditional concepts of taxation into taxing virtual digital assets. And that's why countries around the world, we will see, I think in the later part of the discussion also, how different they are in their approaches. It all boils down to a matter of perception. What does a particular government perceive this new business as? There is no doubt that in the last 2 or 3 years, there have been massive developments in this industry. So countries are all very clear that there has to be a sound and reasonable and uniform tax policy to address this income. And they also are aware that along with taxation, what is required is some sort of a framework, not just a regulatory framework, but also a reporting framework, which will enable the identification of the parties who were involved in this. Right now, it's not just a virtual asset which is being transacted, even the transaction is virtual. Nobody knows as to from where, who is trading, how is it being traded, where is this exchange, where is the place at which the transaction has been entered into. So if you can't define all these things, then it is extremely difficult to have a very cogent and uniform policy. So we have countries which say, all right, we will tax it at a very low rate and try and see that the industry can develop and then see. There are countries which would like to tax it at a high rate and say because there's an income earner. Countries like India have adopted for a high tax regime where the idea essentially is that we don't know what is happening in this industry. Countries like India have another major concern. There are other policy considerations like the capacity or the potential of these assets of being used in illicit transactions or in transactions that can, in one way or the other, aid the hoarding of unaccounted money or in even terrorist organizations. So those are concerns which are major concerns for a country like India. And I think that's why that's been the approach and the outlook from the Indian policymakers as to how and when they were framing the policy or the initial laws for this. So it's something that needs more development, and we talked about regulation, and I think that is an extremely important thing. I commend the industry itself for asking for this. In fact, the industry should self-regulate. They are the best people to find out and to ascertain how to regulate ourselves, how to lay down these principles. Because without principles, there is extremely difficult to say what is really is happening. So there must be regulation. There must be some sort of body somewhere, some codification of exchanges, of authorities. There must be some sort of a system that this is how things are going to happen, and then with a clear information base as to what is being traded, who is trading, how is it being trading, somebody is having an oversight of the whole thing, then that lays the base for sound tax policy, really. So at the moment, I think countries are floundering. I don't think that any country really has really got a grip on how to tax this new economy. And that's why you see such a variety of approaches.
Right. So, but if we were to look at those 3 steps, right, the flat 30% of tax on gains from VDA trade, 1% TDS on transactions above 10,000 rupees, which in itself is much higher than, let's say, an STT for stocks, and the disallowing of offsetting of losses. What do those 3 moves in themselves represent? Does it represent a feeling that there is a lot of money being made here and therefore should be taxed accordingly? or that we don't understand this at all, and therefore let's put the highest possible levels that we can think of, in the hope that it kind of self-regulates itself because of the maybe higher entry barriers.
So no, I don't think that it can be said that policymakers don't understand as to what they're doing. There is a particular view that is being taken in India. That's the impression that I get. Of course, I'm not privy to what exactly has gone on in the corridors of the ministry. But then apparently the perception is that most people in India there's no regular or systematic or organized business activity. In spite of this existence of exchanges which are there in India and overseas, there is no organized and systematic activity. It's a sort of a random activity, and more so in India, where the trend that was noticed was that even in rural areas of India, people were willing to put in 100 rupees or 500 rupees into buying some 0.00001% of some asset, and that was something that was catching on. So at this stage, I mean, that's the perception that the government has, that look, this is what the trading is all about. Until there are rules of business, how can we lay down principles that, okay, this is the sort of expenditure which will be allowed, this is the sort of set off that will be allowed, this is how we will compute that income. Right now, it's essentially, all right, whatever you earn, we'll apply a flat rate of tax. And that's the rationale for all cases where a flat rate of tax is applied, saying that these are not systematic activities, but these are random transactions. So that's where I think India is coming from at the moment. On the TDS, I think that the objective, of course, obviously, is to try and get some idea of who is doing the trading, who are the players involved. And I think there, probably India has not really thought through the whole thing, because we have used our traditional method of TDS to try and get the audit trail, which we have been doing everywhere. TDS applied to e-commerce operators, TDS applied to benefit and immunity everywhere.
Transactions.
Yes. So that's the best way that India has to identify who are the taxpayers or potential taxpayers. It has worked to a large extent in India, but when you talk about the digital economy, then it's extremely difficult to think on how it will work. And it's obvious that there are not only practical problems in implementing that withholding tax, there are also problems of irrationality. I mean, sometimes a 1% tax can be exorbitant. Sometimes it can be very, very small. I mean, it depends on what really has happened. There is no distinction really to say that this is a day-to-day transaction like we have in the stock exchanges. You asked about correlation. Difficult to correlate this activity with the stock exchange activity. In the stock exchange, we have very clear demarcation. These are delivery trades. These are day trades. These are the jobbers trades. These are the derivatives trades. The nature of these transactions is known. Here, there is no idea at all as to whether a transaction is meant to be a delivery trade. What is delivery? Of course, in the context, we don't know. What is it meant to be, a day-to-day transaction to be settled by the end of the day? Is it something, a derivative of some underlying value? And if so, then where is the value? So all these are things that we don't know, very difficult to correlate. So and that's been the I think the basic problem with taxing this. So that withholding tax,
but I think
is not something which is very understandable.
Right, and I think you highlighted an important point. I mean, you mentioned that there were cases of people in rural India, or it could be well within cities, but people belonging to very low-income households who are actually investing in clearly what could be viewed as something very speculative, and therefore a regulator or a government is concerned. And this is definitely a deterrent. I mean, I remember interviewing Dr. Y.V. Reddy once, who was a former governor of the Reserve Bank, and I asked him. I used to ask every governor this. I said, "Who are you thinking of when you're, either hiking interest rates or lowering them, or thinking of some banking regulation?" And his point, and I think Dr. Reddy was the clearest of them all. He said that I'm only and always thinking of the small guy. So I mean, you could be looking at a very macro issue, but I mean, for the governor of the Reserve Bank, at least at that point, his concern was that how is the smallest person going to be affected by it or not? Okay. On that note, Raghavan Ramabadran, let me come to you. So now you've seen both sides. There is the technology-driven exchange in this case, this new currency that we're all trying to understand and derive a sense of what its value is and how is that value delivered, versus what the regulatory concerns are at the top level as well as at the bottom level. So how are you viewing it?
See, the way India is viewing, yes, there is always a stated objective why this taxation is brought in. The stated objective, which we see from the memorandum everywhere, to say that we want to increase the tax base, we want to increase the revenue collection, etc. But the way this particular tax is viewed, because you also mentioned that there is a separate 30% rate, it will not be included in the slab, you cannot adjust, you cannot do. So we are actually creating a separate category of taxation here, much beyond what we have already known. Because it's more than how we tax a speculative income or betting or gambling, etc. And always the Mr. Ranjan was also touching upon, one has to see whether it is goods. People say that my voice is unclear. I'll try to
maybe come a little closer.
Yes, I will come in a bit closer. So whether this category, whether it is goods or not, and I think this being an intangible, there is a natural inclination towards treating it as goods than services, though some clarity is still to come in. But we have seen taxation of tobacco, we have seen taxation of alcohol, everything. We call it as extra commercial. We call it as sin goods. So we have basic necessities, we have luxury goods, then we have sin goods. And this is treated worse than sin goods. Maybe we have a new category like maybe satanic goods, satanic taxes, something like that. So therefore, this is even worse than the sin goods which we have seen so far, treated more akin to a Satan itself. So the way it is being treated, 30% tax, we are not talking about the rate of tax when it comes to output tax. 30%, in most countries, it will pass on as an average tax rate. That's not an issue. But on top of it, you have a TDS, and that too at a higher rate of 1%. And that TDS, whether it is to regulate or whether it is to prohibit, is always a question. Like the kind of business which has gone out, why this TDS is there? If it is only to
Okay, I think we've lost Raghavan there. Okay, Raghavan, while we get you back, and hopefully that is soon, let me come back to Ramesh. Ramesh, I think so. You've I think picked up some of the points, and I think the point that Raghavan made to start with, which is that where do we position this? Is it sinful or satanic taxes, as he calls it, or services, and for which they have to be taxed accordingly? I mean, that's a legal technical way of looking at it. But you've heard Mr. Ranjan's concerns, which I'm sure are not new. Anything that you want to specifically respond to on that?
Yeah, I think there is definitely a need to get into details, right? There are two views you can take, right? I don't know this technology and I'm going to keep away from it, right? And then tax it so that I deter it completely. But is this the positive flywheel we are creating as a country, right? In terms of startup spaces, what are the advantages? For example, if there's a tokenization of real assets, right? If this can happen, or tokenization there are multiple use cases where now even state governments are using, for example, certificates given for COVID cases, so that the technology is fully understood. I think what's important is to have a sandbox approach where instead of a negative flywheel in terms of completely deterring it, to any new technology will not have clear understanding, right? Even when internet came, right, there was a .com burst, and then a lot of improvements happened, and then those. So I think the good use cases have to be understood, gone deeper, and I think that's the need of the hour. Instead of saying, no, this technology should not be looked at, or we don't know where it is coming from, or it's completely in the air.
But I think the fact that it is being taxed, even in, of course, I know there was some debate last year about, are we acknowledging it or not acknowledging it? But the fact that we are taxing it in this fashion is an acknowledgement that it exists.
Yeah. So you're right.
So
that taxation, right? What I want to highlight is the way I understand the entire intent was, how do we track and trace, right? That is number one.
Right. Which is the objective of most taxation.
Stated, and then how do I ensure transparency in terms of what's the transactions are happening, who are doing it, right? And then garner revenue around it, right? In terms of tax revenues. And the unstated objective or understood objective was to deter it till we figure out what's the next step, right? So in that case, if this was the intent and this is what actually happened, then it makes sense, right? Your intent was actually converted into actions. What we also see from this report, right, that the Indian users are still keen on this particular asset class. Instead of doing on the compliant exchanges which we, like us, which are into KYC and certifications and working with the government and regulators closely, instead of us, because of prohibitory TDS rates and those things, are seen to be going outside of India, right? And now, because the asset class is there, the interest is there, and now if you go to international markets, then you are exposed to multiple things, right? So it can be via a gray market, via anything else. Not sure how entire transactions will be done, but in terms of the international vagaries, will then be even more exposed instead of this thing. So the entire objective of trace and track and tax gets defeated, right? And it creates a negative feedback. And the other impact is, if you look at Web3 startups, right? There is also a data which was recently published about 250 to 300 Web3 startups of Indian founders have been registered outside India, right? In countries like Dubai or Singapore, right? Where there is a favorable or there is a favorable approach towards sandboxing or understanding this technology deeper. So in terms of technology, and in terms of taxation, if the intended use was done, I would agree, but I don't think the intended use was fully achieved.
Right. Okay. So, and I'm going to come to Mr. Ranjan on that, but can I come back to you on some of the specific points that Mr. Ranjan raised, right? So he was saying, so for example, when you're trading in stock, right? Are you holding a stock? Are you delivering the stock? So how do those analogies, how does a regulator wrap their head around these kind of analogies? Where is that asset lying today? Is it,
Govind, I'll tell you, we have had multiple discussions with regulators in terms of working with them, law enforcement, with regulators in terms of explaining the entire technology. And more than happy to do again and again with various regulators, companies like us and other companies in exchanges in India have done that multiple times. I think it's an approach of working together, understanding this far more deeply is important. I can go to technical nuances in terms of wallets and how these wallets gets transferred, right? From terms of ultimately it's virtual. So you're right. There's no physical good which gets moved. It's just a ledger entry which happens, and it depends on whether you're working peer-to-peer or you're in centralized exchanges. In case of centralized exchanges, let's say I, as a consumer, invest 500 rupees to buy a Bitcoin. So what happens, right? So you pay 500 to CoinSwitch. CoinSwitch will source the Bitcoin and hold it in CoinSwitch wallets through a custody service provider, right? So the entry is made 500 rupees, which is held by CoinSwitch on behalf of the users, right? So that is how the virtual delivery kind of happens, right? In terms of sale, the same thing happens in terms of sale, that if a user comes and says, now I want to sell that Bitcoin, which is 0.001 Bitcoin, you go and look at the rates currently trading, and it's a global exchange. So the rates are global in nature, right? And then the sale happens on a real-time basis. It's 365, 24/7 kind of a market. And then the same thing happens again. Now 500 rupees is, let's say, now 550 rupees. And this, after TDS, this is the money you can withdraw if you need to be. So, and I can go into, this is the spot market. And then globally, there are derivatives market around it, right? Not in India.
Right. Okay, now I'm going to go to Mr. Ranjan, but just one last point. I mean, what's the, if you're in your understanding, do you have a sense of the demographics of the people who trade on your exchange, including income levels and so on, or other exchanges?
We have seen in terms of demographic, it's split across metro and tier 2, tier 3, right? So there's no particular significant weightage, just it's like a metro only phenomena. there is a distribution interest across the country, right? So in terms of tier 2, tier 3, also has a significant interest in this. From a number of people or users perspective, if we look at the volume perspective, then it may be slightly more concentrated on the metro and tier 1 side, but that is on the volume side, right? So that's on demographic. In terms of age, I think it is on the earlier side, in terms of around 25 to 30, kind of a younger audience in terms of looking at higher exposure, initial period of their journey in terms of professional journey or experience. So those who are looking at a different asset class are the demographics, right? So typically.
Right. So, and to that extent, is that a valid concern then that you're really, I mean, talking about young people, early stage of income, maybe in some cases, as Mr. Ranjan said, people who can't really afford it at all, perhaps, and using this as a, I mean, they could be doing many things, but this is one way they could be spending more than what their otherwise disposable income should be.
My view is overall what we understand, right? What is the allocation to crypto at the moment in various studies we have seen is about 1 to 2% or whatever is a saving. But case to case basis it differs. So can't really can't really pinpoint on the case to case basis. But at an overall level, even if you look at investment bankers across who are advising a lot of clients, they say any exposure around 1 to 5% is where they are looking at.
Got it. Okay, so even you're saying people who have lots of money are only putting a little bit, and even those who have a little money are not putting too much. Is your understanding?
That's my answer.
Okay, got it. Okay, Mr. Ranjan, let me come back to you now. Let's look at the tax rate specifically, right? So it's the argument, let's say, is accepted that we need to tax this. There has to be an element of deterrence built into the taxation structure. But then I guess the question is, why so high? Why should there be a flat 30% tax, no opportunity to net off? And why should it be 1% of TDS on transactions as opposed to, let's say, point something percent in the case of STT? Because with taxation, which in this case you're achieving the objective of track and trace and income or revenue.
Yeah. So actually, India's approach has actually been twofold. One is that since this income needs to be taxed, so there is a tax structure built up. And that structure is built up keeping in mind several things, not just the nature of the transaction of the asset, but also, as I said, concerns that India has about the potential misuse or the views that it can be put to. Also, as you said, that I mean, that part is of course there. People have to make a choice. If people are losing their money on this, that's something that the government would like to regulate properly. But the main concerns are that how are these assets being used? How is this with the digital transactions being used? And I think that's why India has been constantly saying that we need a multilateral approach, a regulatory framework, not just built within us, but a multilateral approach to the recording of these transactions and to the taxation of these transactions. Our finance minister last year in the G20 finance ministers meeting made this point very, very clearly. And in fact, now, when India has been the president of the G20, the regulatory framework and the uniform reporting framework for crypto is a major agenda item for India. So I think is the right way to proceed as far as the government is concerned. It's no point to say that, look, the other countries are doing this, so we should also do that. Switzerland may not have the same concerns that India has. Singapore doesn't want to tax this income at all. But then I think Singapore doesn't have the same sort of concerns that India has at all. There is no point in trying to say there is no international best practice, or there may be several international practices. So every country is, as I said, floundering. And I think the way out is since it is a product of the digital economy, it's something which is here to stay, not just to stay, but to evolve. I'm sure the future will see many, many more add-ons to this, what we are now calling as crypto. The nature of transactions might change. There's some, even this we had not imagined 5 years or 10 years back, but this is happening now, that you're creating assets out of electronic records. So it's something that will keep growing and countries must accept it. Therefore, the answer is to have a multilateral approach. The example I can cite is the recent Pillar 1 and Pillar 2 discussions of the OECD, when you were trying to tax income from digital services, the internet giants' income, and other income. And now, so the assumption there was that, look, there are things that normal tax concepts cannot address. There are forces of the market which are driven by the users, by data of these users, and these are not captured by normal principles. So therefore, we have to find new ways of taxing it, and that has to be done in a multilateral way. I personally think that we need a very strong multilateral approach to get out of this trying to fit existing concepts into something which is very new, very different, very unique. And we must build a new system entirely of trying to tax this income in a different way.
Right. But in terms of thinking, would the taxman in India think, I mean, along these lines, which is that, at this point, we've taxed it at a very high level. Taxation, of course, is evolving, but we are clearly seeing a flight of accounts. We're seeing people now taking this outside in whichever way they are, and which in turn is resulting in a net loss to revenue or a potential loss to revenue. And therefore, could we tweak that so as to at least bring it back? And keep it, and then of course it also helps the fact that you have greater scrutiny.
Yeah, I'm sure the government is quite aware of these movements. The report that was mentioned as is very comprehensive. I had a brief look at that. That's but the conclusions are not entirely unexpected. I think the government knows that people are moving out, that trading activity is shifting outside India. And I think that's why there is a sense of urgency in India to try and come out with a proper framework which can be agreed to multilaterally on an international basis, and then devise a tax policy, a sound tax policy, which can effectively ensure that the tax base remains intact. This shifting of activity is something which has been seen in many situations in the past, and the answer has never been to, all right, let me change my policy, let me make it more attractive. That's not really the answer. The answer is to have it make it more transparent, make it more predictable and liable or amenable to good sound tax policy.
Right. So as a matter, I mean, so it's a principle-based approach rather than a situation-based approach, right? And that brings clarity of its own kind. So I'm going to start taking questions now. Ramesh, a quick question. So you've talked about saying that okay, we want regulations and we want to be regulated. So can you give us a sense of what that structure would be like? Who could be that regulator? If it's an SRO, then and I know there is a body already, but how could that evolve in a way that it's seen as a player by the government or those who make regulation?
Yeah, see, in terms of regulators, right, it's still not understood fully in terms whether it's a store of value or a security kind of a transaction or something else, right? So that is still evolving. We also are evolving, and because every crypto assets can have a very different nature in itself, right? So hence it's important to, can it be a separate asset class by in itself, right? Or a separate bespoke regulation. Some of the countries have made a bespoke regulation for digital assets, right? So it seems from our understanding of central exchange, it's very akin to investments in terms of I'm investing and taking an exposure around those VDAs and then holding and looking at it. So in terms of determining a regulator is still a work in progress. I think that is the first step in which the regulator should think of. And then once that is understood well, then go deeper, double click into this and what will it mean in terms of the line items. Yeah.
Right. Okay. So Raghavan is back. Raghavan, I mean, we've tried to bring out again both sides. I mean, not just in a general sense, but also can we, could there be a graded response in taxation? Because taxation in itself is obviously acknowledging the fact that there is this industry. How do you see this? I mean, it's almost a year now since the first round of taxation happened. We're going into the next budget. How do you see this evolving, or it ought to evolve in your mind?
I think it's not just the government, even the exchanges, everyone wants some sort of regulation, definitely not over-regulation, but some sort of regulation which should be brought up. If some regulation comes in, I think the trust also builds from there. And once the government starts trusting the individuals who are involved in this kind of transaction, then I certainly see that this will also be seen as any other transaction. And why even transaction tax? Why even something like STT? They may even have a regulation mechanism, which Mr. Ranjan was saying that there has to be a uniform reporting framework. If something of that sort is brought in, then we can have a normal tax structure and which can also allow set off, etc. I think as on date, we have this kind of a tax structure. We have a sort of a solitary confinement for crypto income alone. Because of the trust factor, the government believes that there is a way that I can show losses, I can manufacture losses in crypto transaction and adjust it against my regular profits and then pay less tax. I think this sort of a problem is perceived by the government. And that is why this is being kept separately at 30% rate, and they want to track all transactions. This is all because there is no regulation and there is trust deficit. The future, as I see, is once there is some sort of regulation which starts coming in, this tax mechanism also will settle at some point in time, and there will be a lot of clarity. Even for example, say today on GST, we don't have much clarity. NFTs taxation. So all those things, I think slowly, there are many transactions in crypto itself. Like someone was asking about how to treat the interest on giving a loan of a crypto. So those things are also there. As we see, there can be more and more transactions, more and more use cases, which can develop in future. And I think all those things will settle only when some sort of regulation starts coming.
Right, but you're seeing the path. I mean, looking at all the other, you use GST as obviously the best case example, but you're seeing the path to evolution and regulation and trust building up, and therefore maybe some sort of resolution of these issues.
Yes, I certainly do see it, because I see it something coming up, because RBI is at least active in talking about cryptos. And they are the first ones who are more concerned with regulation. I am sure they are working towards some mechanism of bringing in some regulation. So I do see something coming up, maybe some more announcements. I do see that this is going to settle very in the near future.
Great. So that's a sort of optimistic view. Let me take two quick questions. Ramesh, let me begin with you. So Vivek Batra asks, what are the key learnings? And that's something that even I wanted to pose to you from the FTX collapse, from a regulator and market participant perspective. How can this be avoided in the Indian context, or something like this be avoided in the Indian context?
Yeah, so this is exactly which is where the regulators can come in. Right now, it is self-regulation, right? It's a pure case of corporate governance in terms of using user funds for some other activities, right? How do we have a clear accountability towards users? If you look at, we have released a third-party AUP, agreed upon procedures, to show our holdings versus user holdings, right? And just not one side of the story, but on both the sides, right? That's how the industry should work on, having an independent third party coming in, doing AUPs and sorts, right? It's also, it will be great to encourage the big audit firms to participate in this frameworks, right? Today, they are shying away in terms of getting deeper and signing the reports, right? Given the regulatory framework is absent or it's not very clear, right? So the more and more banks and big audit firms come and work collaboratively together on some of these aspects, right? I think those are definitely important for building those trust. In case of FTX, it was purely mismanaging the funds, right? And if you and some of those aspects should definitely be part of the regulator.
Got it. Okay, yeah, and it seems like a classic diversion of funds. I mean, which we are all familiar with, rather than something unique to crypto. Am I right?
Absolutely. This is not a crypto specific. It's a classic problem of corporate.
It's a classic fraud. Okay.
Yeah.
Okay. Another question. Alpesh Gandhi asks, there are news articles that domestic trade volumes in crores are shifted to foreign crypto exchanges, which is, I guess, true. This is what the study also says. What is the view on whether foreign crypto exchanges are obligated to comply with withholding provisions, and whether government can come up with clarifications around this in the coming budget? Ramesh, you want to go first?
Yeah, it's important, right? And this is where, if you look at the entire objective and track and trace, this is where local Indian exchanges, right? We work together. We are sharing the information, right? And there are frameworks in place for, let's say, securities, right? There is Form 61 on AIS where you share information. All of this, if done rightly, can encourage, right, Indian exchanges to to be compliant. And then it also builds a positive flywheel in terms of users having a lot more trust, right? So it's important for them. Right now, my understanding is the government has left if the foreign regulators are not withholding the tax, the responsibility lies with the individuals for them to pay advance tax, right? So the responsibility is not, it's shifted to individuals now in such cases, and they may be exposed if not done properly, right? So it adds to those newer exposure which they may not be aware of, and this is where Indian exchanges for compliant can help enable those customers. Yeah.
Right, and Shrishti Mantri asks a question along those lines. I think she says that exchanges are now giving audit reports of proof of reserves and liabilities, but they seem not to have the same level of trust as audit of financial statements. And you talked about bringing in the auditors. So how can the accountability of exchanges be established or improved, I guess?
If you look at what is audit versus AUP, this entire crypto, the VDA piece is completely new, right? And hence it's still evolving in terms of what is the right process. Audit of our company is done. The reports are in MCA website, right? And anybody can download those reports. How we hold our accounting policies, right? And for the specific instance of building customer trust, right? As a company, we have gone forward, had a third-party independent. Instead of just publishing the wallet IDs and giving this is my one side of the story, we have given both the side of the story in terms of getting a third-party independent audit of a senior professional senior chartered accountants come in and do those, and we have published those as well. Right? So I think those are a lot of customer trust building pieces which we have to do, and there's a lot more to do. So it's just a starting point for us.
Right. Okay. I'm going to come to Mr. Ranjan for a sum up and last question. But before that, Raghavan, here is so this is, as I've seen in all Taxsutra discussions, someone or the other will ask a question which is directly beneficial to them or strategically important to them. So Vivek Arora asks, can an Indian company invest in foreign cryptos and take the benefit of arbitrage, keeping in view FEMA provisions?
I mean, he will invest in foreign exchanges and then he will buy cryptos. The tax will definitely be there. What is the arbitrage opportunity here? I need to understand the question more.
Okay, for which he should consult you separately. I think that is the other point which is important. Okay, anyway, so I mean, I'm assuming that at least as the question goes, we're treating it as any investment overseas for which you'll be taxed and not necessarily separate. No, so I think the question could also be that
he is an Indian, he is going to be taxed on his global income here.
Either ways. No, but could he be taxed in the same level as he's taxed here for a crypto transaction? I'm guessing not.
Yes, because the Indian laws apply 30% rate. He is an Indian. He is a resident here. So therefore, whether he is having it elsewhere in India doesn't make any difference. His global income is going to be taxed.
In this format. So the 30%. Yeah. Okay. Got it. Okay, Mr. Ranjan. Last question.
Including 1% TDS, which if not deducted by the international exchange, you have to deduct it yourself and pay as advance tax, right? If not, then you are again exposed.
Got it. Okay, Mr. Ranjan. Last question to you, at least from me. Then I hand over to Arun. So I think Dhritiman Murthy, I think, is asking essentially, does the ability to, it's a very nuanced and more philosophical question, I think, does the ability to transfer value anywhere without a third party intermediary have no value? When we talk about it neutrally, he says Bitcoin issuance, the fixed cap on supply is not meant to make it attractive for investment. It is meant to be predictable. So essentially the benefits of a Bitcoin kind of currency, which is why maybe it was created in the first place. So can we really say that there is no intrinsic value to this when no other technology or company can recreate the system that VDAs like Bitcoin or Ethereum have created, is what Dhritiman Murthy is asking. So I think maybe I could ask you also to sort of close on a more philosophical note. How does the taxman view this thing as an evolving sector, and how could we go from, or rather, where could we go from here?
Yeah, so this question I think is very, very relevant. In fact, this is the key issue. Now, I do not intend to say at all that there is no intrinsic value in crypto. What I was saying was that for policymakers who are trying to apply traditional concepts of taxation to these transactions, they find that these traditional concepts do not work. I mean, and that these are sort of problems that they face because they are unable to decipher the value. They are able to decipher the location or the situs or the concepts which are necessary. But then it's absolutely true that the ability to transfer value itself is a value. So these are things that must be conceptually understood, and a system of taxation which is different from what we have been used to for all these 100 years in India has to talk about these concepts, and that is why we need a multilateral approach to this whole issue. It's not just India's problem; it's a problem of the whole world. As I said, this industry is going to grow in volumes and in nature. And therefore, it is high time that countries must come to some way of saying that let us try and have a uniform approach. And for that, first of all, regulation, uniform reporting, and then come to a fair understanding of what sort of, how do we ascribe value? I mean, should we stick to these old concepts, or should we have a new way of taxing income entirely? So I think that it is something which is a challenge for the future. I'm sure India is alive to the challenge along with other countries. I don't know whether there'll be any change in the next budget, as you were mentioning, Govind. It may be too early for that. But certainly, as I said, the OECD has already come out with a detailed report on the reporting framework that countries can adopt. It's something to be adopted by the G20. I think a lot of things are happening multilaterally, and I'm sure that in a short period of time, countries will come down to framework, have a modified policy on these things.
Right. Thank you very much for that, Mr. Ranjan. Did you want to say something, Raghavan? I thought I saw your hand up.
No, sorry, I wasn't putting it.
Okay. Good. Okay, great. Thank you so much, Mr. Ranjan, Ramesh Bafna, and Raghavan Ramabadran. Sorry, Raghavan, we lost you for some time, but I think we got you back in time. It's been a pleasure speaking to all of you to understand the evolution of this fascinating currency or instrument, and hopefully there will be a middle ground in terms of where the regulator meets the exchanges, meets the investors in a circle of trust, which is the most critical thing when it comes to money and assets like this. On that note, thank you, and it's back to you, Arun.
Thanks, Govind. Very, very insightful panel discussion. So many points covered in just about 45 minutes. Ramesh explained cryptos very well. The industry point of view came across so beautifully. Mr. Ranjan, I think Akhilesh sentence that you can't apply traditional concepts to taxation of cryptos, and advocating for a multilateral approach. Let's not forget that Akhilesh, Mr. Ranjan was India's face when it came to global tax policy for quite a while as India's competent competent authority. So if anyone knows something about global tax policy, it's Mr. Ranjan, and advocating for a multilateral approach, I think, is the right way to do. G20, India now having the chair, next 12 months will be very, very interesting when it comes to crypto taxation. Before that, crypto regulation. And Raghavan sir, of course, thanks so much for your insights. And when we talk about taxation of cryptos, my colleague wrote a little bolder headline for this panel, which we checked. He said, is crypto taxation, are we throwing the baby out with the bathwater? But Akhilesh sir is advocating a little more patience before we see any changes. The crypto industry is expecting some changes this budget itself. Raghavan sir, you're being a little more pragmatic on this point.
Yes. Let's hope for the best in the coming days.
So he's playing a perfect lawyer. Let's be hopeful. On that note, thanks so much. We've had a wonderful participation, so many questions. Govind, couldn't thank you enough for moderating this panel. With Govind, you know that a panel will be fast-paced, outcome-focused, and you will get something for everyone to take home as we have from this panel discussion. Thanks everyone for joining this Taxsutra panel discussion on crypto taxation. Thanks, Ramesh ji. Thanks, Akhilesh sir. Thanks, Raghavan sir. Many thanks, Govind. And to all our readers, viewers, wishing you a wonderful 2023. Let it be a taxation-filled, exciting. When I say taxation-filled, not tax-filled, but let's hope that this is an exciting year for tax policy with the budget just 4 weeks away. Thank you, everyone.
Thank you, everyone. Thank you.